Good afternoon. Today we are going to discuss about what is the meaning of business and profession and income from the business and also profession. So first, what is meaning of business? Section 2 subsection 13. Business means any economic activity carried on for earning profit. It includes trade, commerce, manufacture, any adventure or concern in the nature of trade, commerce or manufacture. So, what is meaning of profession? Section 2, subsection 36. A profession is an occupation requiring purely intellectual skill or manual skill. For example, lawyer, accountant, engineer, doctor, and author. It also includes vocation. Income from business and profession. Some key points must be carried on by assessee, must be carried out on during the previous year, only profit of the previous year are to be taxed. Income includes negative income, that is loss. A person cannot do business with oneself. Hence, notional profit is not taxable. If a proprietor withdraws goods costing 5 lakhs for personal use and agreed value of 60,000, then profit of 10,000 shall not be taxable. There is no difference between legal and illegal business for taxation purpose. Even every income from illegal business shall be taxable. Now, what is basis of charge? Section 28. The following income shall be chargeable to income tax under the head profits and gains of the business or profession. The profit or gains of any business or profession, section 28. Income derived by a trade, professional or similar association from specified services performed for its member. The value of any benefit or perquisite, whether convertible into money or not, arising from business or the exercise of profession. Any interest, salary, bonus, commission, or remuneration due to or received by a partner from a firm. Any sum received for not carrying out any activity in relation to any business or not to share any know how, patent, copyright, trademark, etc. Income from speculative transaction. Specific deductions. Section 32, Section 37. Rent, rates, taxes, and insurance for building used for the purpose of business. Repairs and insurance of plant and machinery furniture. Depreciation of building or plant and machinery. Investment allowances. Tea, coffee, rubber development account. Site restoration fund. Reserve for shopping business. Scientific research expenditure. Amortization of telecom license fees. Expenditure on eligible projects or schemes, deduction in respect of expenditures on specific business, payment to association and institution for carrying out rural development program, weighted deduction for expenditure incurred on agricultural extension project, weighted deduction for expenditure for skill development, amortization of preliminary expenses, amortization of expenditures and development of certain minerals. Now, other deductions. Insurance premium of stock in trade, bonus or commission to employees, interest on borrowed capital, employers contribute to provident and other fund, employees contribution to the approved gratuity funds, bad debts. Now, section 30. Rent, rates, taxes, repairs and insurance of building used for the purpose of the business. Rent. Rent of the premises is allowed as deduction. However, national rent paid by proprietor is not allowed as deduction, but rent paid by him to its partner for using his premises is allowed as deduction. Current repairs is the assessee bears the cost of the repairs are allowed as deduction. However, capital repairs incurred by the assessee are never allowed as deduction whether premises is occupied as a tenant as a owner. Instead, the capital repairs incurred shall be deemed to be a building and depreciation shall be claimed. Any sum on account of land revenue, local taxes or municipal taxes subject to section 43B. As per section 43B, deduction shall be allowed only if such sum is actually paid on or before the due date or furnishing or return. Insurance charges against the risk of damage or destruction of building is allowed as deduction. Now, section 31. Repairs and insurance of plant, machinery and furniture. Repairs to the plant, machinery and furniture is allowed as deduction. However, capital repairs incurred by the assessee are never allowed as a deduction where the plant is leased or is purchased. Instead, the capital repairs incurred shall be deemed to be an asset eligible for depreciation. Premium paid for insurance against the risk of damage or destruction of plant, machinery or furniture is allowed as deduction. Now, section 32, depreciation. In respect of depreciation of building, machinery, plant or furniture being tangible assets, know-how, patents, copyrights, trademarks, license, franchises or any other business or commercial rights of similar nature being intangible assets acquired on or after the first day of April 1998. Now section 36 subsection 1, insurance of stock. The amount of any insurance premium paid in respect of insurance against risk of damage or destruction of stocks or stores used for the purpose of the business is allowed as discount. Now section 36 subsection 1 and 1b, insurance premium on the health of employees. It is allowed as deduction if following conditions are satisfied. The premium is paid by check by the employer and premium is paid under the scheme framed in this behalf by the General Insurance Corporation of India and approved by the central government. Now, section 36 subsection 1 and 2. Bonus or commission paid to the employees. Bonus or commission paid to an employee is allowable as deduction subject to certain conditions. Admissible only if not payable as profit or dividend. One of the conditions is that the amount payable to employees as bonus or commission should not otherwise have been payable to them as profit or dividend. This is provided to check an employer from avoiding tax by distributing its profit by way of bonus among the members employees of his concern instead of distributing the sum as dividend or profits. Deductible and payment basis. Bonus or commission is allowed as deduction only where payment is made during the previous year or on or before the due date of furnishing return of income under section 139. So section 36 subsection 1 and 3. Interest and paid on borrowed capital for the purpose of business or profession. So conditions. As per Supreme Court judgment, the sum of money should be borrowed from another assessee. The loan may be borrowed from any bank, financial institution, government, public funds or relatives. Loan may be in the form of debentures or deposits, etc. Interest on capital or loan to proprietor is not allowed as deduction since the loan is not borrowed from another person. Interest paid by the firm, its partner on their capital contribution is allowed as deduction. Such borrowed money should be used for the purpose of business, not allowed as deduction. For example, the loan is borrowed for the payment of income tax, not allowed as deduction. However, loan is borrowed for payment of dividend or sales tax is allowed as deduction. The interest has accrued during the relevant previous year. However, where the interest falls as under section 43b, that is, where interest is payable to banks or financial institutions, then to claim deduction such interest should actually be paid on the before of the due date of the furnishing of return. Now interest on borrowings for acquiring new assets. Provision 1 to 36. Interest accrued before the commencement of business not allowed as deduction but has to be capitalized and added to the actual cost of fixed assets acquired out of borrowed capital. Interest accrued after the commencement of business but before the asset is put to use is not allowed as deduction but has to be capitalized and added to the actual cost of the fixed assets acquired out of borrowed capital. Interest accrued after the asset is put to use is allowed as deduction under section. So some other points where interest is paid outside India without deduction of tax at source is not allowed as deduction. Income tax department cannot question the need for borrowing and the rate of interest. Interest other than interest on borrowing is allowed as deduction under section 37 and not under this class, for example, interest on late payment of sales tax, etc. Now, section 36 subsection 1. Employer's contribution towards recognized provident fund or an approved superannuation fund. Employer's contribution paid towards recognized provident fund or an approved superannuation fund is allowed as deduction but subject section 43b. However, contribution is to non-statutory fund or unapproved fund is not allowed at deduction. In case of contribution towards superannuation fund is allowed as deduction under section 37. Now section 36(1). Employer's contribution paid towards an approved gratuity fund. Any sum paid by the assessee as an employer by way of contribution towards an approved gratuity fund created by him for the exclusive benefit of his employees under an irrevocable trust is allowed as deduction subject to section 43b. Now section 36, that subsection 1, employer's contribution towards staff welfare scheme. Any sum received by the assessee from his employees as contributions to any provident fund or superannuation fund or any fund set up under the provisions of the Employees State Insurance Act or any other fund for the welfare of such employee is treated as income in the hands of assessee unless such employee's contribution is credited in the employee's account on or before the due date specified under the provisions of any law or terms of contract of services or otherwise. However, employer's contribution, not employee's contribution, towards such fund is allowed as deduction subject to section 43(8), that is, such contribution is paid on or before due date of furnishing return. Section 41, subsection 4, recovery of bad debts. Where a deduction has been allowed in respect of a bad debt or part of debt, then if the amount subsequently recovered on any such debt or part is greater than the differences between the debt or part of debt and the amount so allowed, the excess shall be deemed to be profits and gains of business or profession and accordingly chargeable to income tax as the income of the previous year in which it is recovered, whether the business or profession in respect of which the deduction has been allowed is in existence in that year or not. Now section 36, subsection 1, family planning expenditure incurred by company. Deduction in respect of revenue. Expenditure for promoting family planning amongst its employee is allowed as deduction, and in case of capital expenditure, 1/5 of expenditure incurred is allowed as deduction in 5 equal installments. Following expenditures were held to be incurred wholly and exclusively for the purpose of the business: official or administrative expenses, audit or legal fees, advertising expenses, traveling or conveyance expenses, entertainment expenses, interest paid for overdraft facility, remuneration payable to employees or other expenses incurred for the benefit of employees. Diwali expenses, interest paid on payment of dividend is allowed as deduction. However, interest on payment of income tax or other personal liabilities is allowed as deduction. Now, following expenditures were held to be personal expenses: drawing by the owner for personal use, interest on own capital in case of proprietorship concern, remuneration paid to owner of the business in case of proprietary concern, donation under section 80G or any other similar donation not connected with the business of the assessee. However, business donation is allowed as deduction. Now others, not allowed as deduction. Any provisions or reserves for contingencies, anticipated loss, dividend, sales tax, custom duty, excise, gratuity, bonus, etc. However, actual payment of sales tax, excise duty or custom duty is allowed as deduction subject to section 43b. Note: however, under section 40a, subsection 7, provision made for gratuity which becomes payable is allowed as deduction. Notional expenses, that is rent paid for own building, etc. Now, income from business and profession, some key points. Must be carried on by assessee, must be carried on during the previous year, only profit of the previous year are to be taxed. Income includes negative income, that is loss. Relevance of method of accounting. A person cannot be business with oneself, hence national profit is not taxable. In a proprietor, withdraw goods costing 50,000 for personal use at an agreed value is 60,000, then profit of 10,000 shall not be taxable. There is no differences between legal and illegal business for taxation purpose. Even income from illegal business shall be taxable. Now, income from business and profession. What is the meaning of business? Business includes trade, commerce, manufacture, any adventure or concern in the nature of trade, commerce or manufacture. What is meaning of profession? Profession includes vocation. Profession requires purely intellectual skill or manual skill on the basis of some special learning. Income from business and profession. The following income shall be chargeable to income tax under the head of profits and gains of business or profession. The profits of gain of the business and profession, income derived by a trade, professional or similar association from specified services performed for its members. Export incentive, profit on sale of import license or duty, entitlement passbook, cash assistance received or receivable by an exporter under any scheme of the government, export duty drawback. The value of any benefit or perquisite, whether convertible into money or not, arising from business of the exercise of profession. Any interest, salary, bonus, commission, and remuneration due to received by a partner from a firm. Any sum received for not carrying out any activity is relation to any business or not to share any know-how, patent, copyright, trademark, etc. Income from speculative transaction, any sum received under Cayman insurance policy including bonus and such policy. Income from business and profession. Computation of income from business. The profit and gains of business or profession shall be computed in accordance with the previous contained on section 3244 DV. It must, however, be noted that the allowances and deductions are not exhaustively excluded. Admissibility of deduction will depend upon the method of accounting followed by assessee, subject to deeming provisions of the Act. Income from business profession, some deductions under section 36. Insurance premium, insurance premium paid by the Federal Milk Company Society, bonus or commission to employees, interest on borrowed capital, discount on zero coupon bond, employers' contribution to recognized PF and superannuation fund, employers' contribution to notified pension scheme, provision for bad and doubtful debts relating to rural branches of scheduled commercial bank, transfer to special reserve, family planning expenditure, revenue expenditure incurred by entities established under any central, state or provisional act, banking cash transactions tax and securities transaction tax, commodities transaction tax, advertisement expenses. Income from business and profession. Section 37 and subsection 1 is a residuary section. In order to claim deduction under this section, the following conditions should be satisfied. The expenditures should be the covered under section 30 to 36. It should not be in the nature of capital expenditure. It should not be personal expenditure of the assessee. It should have been incurred in the previous year. It should be in respect of business carried on by the assessee. It should have been spent wholly or exclusively for the purpose of business. It should not have been incurred for any purpose which is an offence or is prohibited by any law. Some depreciation chart. So, building, residential building, the rate of depreciation is 5. Or factory building, office building, godown, stockyard, borewell, wall compound, temple, road or etc. Anything else that will be 10%. Next, furniture. Office furniture and appliances, the depreciation rate is 10%. Plant and machinery, car, two-wheeler, mobiles, these are chargeable by 15%. Computer, laptop and software books other than covered under 100%, this will be charged by 60%. Books used by professionals, air pollution control equipment, 100% depreciation will be allowed. Intangible assets, patents, copyrights, trademarks, know-how, 25% depreciation will be allowed. Now depreciation. Depreciation is available whether or not the assessee has claimed deduction in books of account. If a part of the assets is used for business purpose and part is used for the personal purpose, depreciation should be allowed only for the portion for which the asset is used for business purpose. Usage during the previous year is important. If asset was acquiring during any preceding previous year and put to use in current previous year, it is eligible for full depreciation. Further, asset acquired during the previous year and usage. No usage, no depreciation. Used for more than 180 days, full normal depreciation. Used for less than 180 days, 50% of normal depreciation. Now some more key points in depreciation. Block is formed for common asset with a common rate of depreciation, and accordingly depreciation is calculated based on block concept and not an individual asset. Any expenditure incurred till date, asset is put to use to be capitalized, that is added to the cost of assets. Depreciation is calculated only as per written down value method. In case of company SSC, depreciation is recorded as per company law. In such case, depreciation as per book is added book, while depreciation as per Income Tax Act is allowed. While computing the income of such company, whether asset is eligible for depreciation or not, it depends on nature of asset and purpose of holding asset. Land is never to be depreciated.